Hi everyone, this is Terence Tan, the Impossible Investor. It's taken a while over here. There's a break in between the top 10 stocks on the final one over here, but I'm back and I'm going to lay out stock number 10 for 2019 for our Impossible Stocks portfolio. Let me just explain a little bit of the weight over here. If you look at the markets over the last 2 months, market has been on an upstretch over here since I did my stock 8 and 9. So rather than try to rush a stock in a market and try and chase the prices over here, I was actually opting to just wait out and see and pick out the right opportunity for the right stock over here. And here I am today after a market correction over the last Friday. Falling through to yesterday itself, where we have kind of like a non-existent market or a sideways market, and I'm going to be here right now talking about stock 10 for 2019. Okay, now let's proceed over here. Let's first get to the updates for our first 9 stocks in our Impossible portfolio. So I first issue AT&T over here, and based on the current price right now, it's actually up. So that's a good sign over here. And XOM, which was issued also in November, and it's also experiencing a profitability position right now. CAH is down by a little bit. Qualcomm, it's kind of flat at the moment. TSN has managed to experience a good run up over here together with Altria. Alright, so Tyson Foods, Altria is having a good run up. Newell Brands is still in the midst of their restructuring, so the prices hasn't really moved. A.O.Smith over here has benefited from a rebound in the stock, which we kind of expected. We just don't know when it's going to happen and how soon, but it's happened sooner than we expected it to over here from the markets. And General Mills has done well as well over the last 2 months, because this stock was issued just about 2 months ago. Now, so today we're going to go into our final stock for the portfolio over here that we're going to build up for 2019. So let's take a look at what we have today. Now, so today I'm actually going to build on, as the famous investor has said over here, Mr. Buffett, you need to start being greedy when other people are fearful. So this is a pretty classic standard play over here with Kraft Heinz. Now, so let's take a look at the reasons I'm putting out this stock in our portfolio. Now, so Kraft Heinz has been experiencing a big merger issue since Kraft as a company and Heinz has started and decided to merge in the year 2015. So when the companies merge to become the KHC that we see today, it's kind of experienced issues with the mergers, and sales revenues has been kind of on a dip or non-ideal, and many of their brands over here are experiencing a dip in sales. But this is normal when it comes to HO food brands over here because of the innovation that is required, and they would act on it. Now, so let's take a look. The recent Q4 earnings report for 2019 didn't come out too ideal, and it kind of put a nail in the coffin in terms of the recent negativity that is going on this big conglomerate that we're seeing. Now, so it's down to these various reasons: tiring brands, change in consumer taste, and all this has affected the profitability of the company. And similar problems has also been seen with our kind of other food companies that we have in our our portfolio as well. So they are General Mills and Kellogg's. Yeah, right now. So Buffett is still a strong advocate of Kraft Heinz at the moment, and he has yet to announce or made any announcement of him bailing out of the stock. And this is pretty much unlike what he did over here with the position that he had on IBM. Now, so we just feel that the game is not over yet when it comes to Kraft Heinz. Yes, the stock has experienced a big dip over here because of the profitability and a bad quarter coupled together with a SEC investigation on their accounting policy. So it's like a big bam hitting that one stock in the market right now, and it presents us this little opportunity. Now, so the difficult part was really to know if this is going to be a genuine opportunity, or if this is going to turn out to be one of those value traps over here. But if Buffett is going to stay in there, that gives us a little bit of reason to try and be greedy when other people are fearful right now. Now, so this is a very simple play of down and out corporate turnaround on a strong giant and a strong company that we have for 2019 over here. Okay, now so let's take a look at Kraft Heinz. Now, so based on what we have yesterday before market open, Kraft Heinz was sitting at 32.29 on a stock price basis, and that actually provides a dividend return of 4.89% if you were to get in on the stock at around current prices. Now, So they have announced dividend changes over here. So as of right now, 4.89 is what you're gonna get when you purchase the stock at current price level. So that still beats inflation rate on a long run basis. Now next, it's also currently trading at its 52 weeks low, so that's actually a very good sign. And if I'm not too wrong, it's currently trading at a 1, 2, 3, 4 years low as well, if I'm not too wrong, or maybe even a 5-year low. So do check on it as well. But what I know is Kraft Heinz as a company as a whole is trading at a very, very low valuation right now. So we are pretty much banking on the turn of events and Kraft Heinz cleaning the company up, pretty much like what Kellogg's have done, and also Procter & Gamble actually. Yeah, alright. So all these age-old brands, have gone through this period over here in companies restructuring or renewal, as they call it. And yeah, so we believe they're gonna get through it, and we're gonna be positioned to benefit, when that happens over here. But when it's gonna turn around, when it's gonna kick in over here, that we don't know. But we're gonna position ourselves well in an up or expensive valuation market conditions with a low valuation stock over here. Okay, now, so for these reasons that I've just listed in the video over here, we believe that there's going to be some good upside movement on this stock over here in 2019, and this will form up our final stock in our 10 stock portfolio for 2019 over here in the month of March. So we've completed it. It took me over here 3 months to make my final selection and complete this portfolio, but we are on track. Yeah, we are on track right now. So market continues to exhibit concerns on a major correction over here amidst a bullish trend that we are seeing right now. So we remain focused on good value, strong companies over here found in our very special, unique IMP way that we call it over here. Now, so if you're really interested to find out how IMP works and continues to drive and gives us the opportunity to find the great companies over here in what we call a 5-second rule. Yeah, alright, and get the right valuation in under 5 minutes over here. Alright, you're gonna find out at one of our next available introduction session, alright, that we are holding on a regular basis. And yeah, I really look forward to seeing you at one of those sessions if you're not already an Impossible investor in our community. Okay, now, so all 10 stocks over here have been identified. Monthly updates are going to happen from right now onwards for these 10 stocks until December 2019. All right, just to track the performance of the portfolio. Right now, so in my next update over here on this portfolio, what I'm going to do is I'm going to assume a 10% exposure on each of these stocks in the portfolio. Yeah, so for example, if we're talking about $100,000 portfolio, that means $10,000 is going to go into each stock over here that you're going to find, all right, in our list. Now, and each stock will also build in an inherent 25% drop in cut loss price over here, which means if based on our purchase or entry price, if the stock should drop 25% below those prices over here, a cut loss is going to be activated, and we're going to take it as though the positions has been closed over here. This is pretty much down to a simple money management kind of built in on a stock portfolio. And that will represent a 2.5% portfolio drawdown if any of these stocks that we have on our list were to hit their cut loss price levels. Okay, now, so each of these 10 stocks over here will have equal weightage in our portfolio, so it's going to be easy to track on a return basis for the whole portfolio itself. Now, so I really look forward to seeing you in my next month's video where I do an update on the top 10 stocks that we have positioned ourselves in for 2019. And we really expect it to perform well and outperform the market for this year itself. But we'll have to see as the months unfold over here how it builds up and what kind of stability we have over here. Now, so if you like this video over here, thank you for staying until the end. Same thing over here, leave a comment on the video idea if you'd like me to cover it, and any topics that you want me to cover in relation to investment techniques, approaches, or stocks and stock markets over here as a whole. Alright, now, so do subscribe to the channel if you're not done so, because I'm going to continue to add top quality stocks found in the IMP way over here to our community, as well as you as a subscriber over here. I'm going to talk about more ideas and thoughts about how you should invest and how you should build your portfolio the right ways. Yeah. Alright, now, so thank you very much for being part of this series and watching this video from the first stock until now, the final stock in our edition, and I'll see you in my next video, which is going to be an update of this portfolio over here. Alright, have a great day, stay safe, stay sane, invest impossibly over here, and we look forward to welcome you in our Impossible Investor community. Alright, so this is Terrence over here signing off as the Impossible Investor. Alright, see ya.